Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
So a focal point for investors and the Fed tomorrow morning's monthly jobs report. We'll have that at 8:30 a.m. Wall Street time. The expected upcoming annual January revision to U.S. job growth will be substantial, but probably not as bad as initially estimated, underscoring, Tim, a labor market that is gradually cooling.
With more on what to watch for, we've got a Bloomberg News, Bloomberg Economics U.S. economist Stuart Paul joining us here in the studio, along with Bloomberg's Vince Cignarella to connect the dots between the data and the markets. Really pleased to have both of them here in the studio with us. Stuart, I do want to start with you. What is the number expected tomorrow, consensus versus what Bloomberg Economics expects?
For payrolls, we're expecting 215,000 jobs added in January. Consensus is closer to around 170, but if you listen to the whispers on Wall Street, folks are really inching up towards that 200,000 mark. But there were strong economic fundamentals throughout the month. We saw hiring accelerating as reported in PMIs. ADP surprised to the upside also. We also do have to take account of the fact that there was a polar vortex in that lower 48 states. And we also had wildfires in Los Angeles shaving a few thousand jobs off the January report.
So in other words, the job market might be stronger than we think because of those special instances?
Well, so the amount of hiring in January was relatively robust. But if we think about all those revisions that you were mentioning, it's going to lower the base against which we're measuring January payroll growth. As you mentioned, through March of 2024, we're going to get a downward revision. We think of about 700,000 jobs, less than the 818,000 originally estimated. Then we get revisions of the birth-death model through the end of 2024. That's going to shave off, we think, about another 235,000 jobs, bringing total payrolls at the end of 2024 down by about 935,000 jobs. Adding 215,000 in January is great, but it doesn't mean that we're breaching where that high watermark that we thought we had already set.
All right. So Vince, you watch the ins and outs of the market. I mean, do traders care about these kind of revisions?
They didn't last year for whatever reason.
Might they this year?
They might, and it might be more of a political hint of things than anything else, especially with all the stuff that's going on and rumors with DOGE and all this stuff, that maybe things aren't as up and up, if you will. But to Stuart's point, traders are looking for a number closer to 200,000 tomorrow. So I agree with him. I think the asymmetric risk is we see a higher number tomorrow, which is definitely going to probably weigh on treasury yields and maybe even on equities, at least for the short run.
Vince, how does it contrast to, in weight of importance to, Carol said it feels like Friday because it's been quite a week, but with the tariffs news where we focused early in the week, that was all anyone could talk about.
Yeah.
What's the distinction there between what traders are focused on, the eco data, what comes out of the White House when it comes to tariffs and trade? How do you make sense of that?
So it flipped. No one cared about jobs when the tariff news was out. When you were looking at 25% tariffs on both Canada and Mexico, 10% going out to China, that was the big deal. When that was on pause, bang, back to economic data, back to earnings.
Right.
That's now the focus. A couple of weeks from now, 3 weeks from now, whenever this pause ends, if we go back to tariffs again, we're going to flip again. It'll be tariff news that weighs. And I'd say what Bessent said today, the market's not picking up on. He basically said China's going to be the ones eating the cost of these tariffs. That means the tariffs on China aren't going anywhere and could possibly be increased. So that may sort of even things out where both data and tariffs come back into the picture.
Do you agree, Stuart, that China is going to be the ones eating the tariffs?
I think when it comes to prices, I do expect China to eat a large chunk of the tariffs. There are too many margins along which prices can adjust before consumer goods get to the shelves.
So they, in other words, reduce prices
inflation
ahead of the tariff.
So China can lower their prices as they're heading out of the ports. You can end up seeing further dollar appreciation that helps to offset the effect of tariffs when it comes to consumer prices. When you look within the federal government data and you look at corporate profits, at least in the aggregate, there is room for compression there. So there are all these margins, again, against which prices can adjust before goods get to the shelves for consumers. So who's going to end up feeling the pain? Probably China a bit more than U.S. consumers for that specific set of goods.
So you're saying like a manufacturer who manufactures over in China, even though it might be an American company, the manufacturer in China is going to say, we're going to cut your costs. So we're going to eat some of that over there, so that once the tariff is put on, the American consumer doesn't feel
you
the price hike.
You have manufacturers, you have importers, you have wholesalers, and then you have retailers. All along that chain, you have room for compression before consumers feel the pain.
Vince, what is it like, though, like in this environment? Like, we've seen Donald Trump in the White House before. It does feel a little bit different. But there is a lot coming at investors and trying to figure out what's the sticky stuff, what's the stuff that really sticks around. Is it tariffs? Is it tax cuts? Is it, I don't know, or is it, like, what is it?
So
how do you make sense here?
I think we have to think the tariffs are going to be here. He ran on tariffs. He's thinking about putting across-the-board tariffs, which nobody is talking about, of 2.5% or higher. It's in the background. He's not even brought it up too much, but it is in the conversation in the White House that 2.5% to maybe 5% tariffs could come out across the board on every product. We're not seeing that yet. That may not come forward, but they're talking in the White House, and it's not practical. But they're thinking in the White House that they can use tariffs to either reduce or eliminate the income tax. Now, the U.S. consumer would obviously love that. We'll pay for, you don't pay a tax unless you buy something. Probably, I mean, realistically, not going to happen that it can compensate. But I believe they think that they can do some form of tariffs to raise some revenue, along with the cutting of expenses, that they can cut taxes to appease the voter base and to just to promise to deliver on what he promised.
You know, I think about what you just said, Stuart, because as an economist, you know, you have to figure out, again, how long these tariffs stick around, if there's more that are put on. I understand that China can eat some of it, perhaps, but there's got to be ultimately an impact on some U.S. companies, too.
Sure, there are an impact on U.S. companies.
And growth, ultimately, maybe here in the U.S.
And growth, that's right. So the first element that you have to deal with on the growth, when it comes to growth, is that before tariffs are implemented, you have a surge in imports, and that starts to weigh on growth. With the implementation of tariffs on Canada and Mexico delayed until March, again, expect to see as much importing of goods from those two trading partners in advance of announced tariffs or any sort of agreement during the first quarter. So that's going to weigh on growth immediately. Then the growing pains that come with reorienting supply chains does weigh on growth as well. So I'm certainly not dismissing those. As a geopolitical tool, though, in sort of trying to position the U.S. vis-a-vis China, it makes sense that Trump would look to keep those tariffs in place. Where it gets to be a little bit simpler of a relationship, let's say with the U.S. and Canada, it doesn't make as much sense to be as harsh with tariffs on Canada, for example, and because most of the net exports that Canada is sending our way are energy products, and Trump isn't going to want to deal with higher energy prices, especially if that does ripple through to the gas pump.
Hey, Vince, I want to give you the last word on the trade. When you say that the market's not picking up on what you think the president has communicated with regard to tariffs, what exactly do you mean? What do you think? Where do you think prices should be?
Well, I don't think they're taking it seriously, that tariffs are coming. I mean, let's not forget, we already have tariffs in China that he imposed in his first term. They're still on. The Biden administration didn't take them off. So it's not like he's opposed to doing this. I think, you know, what the tariffs and the situation with Canada and Mexico, the thought process on the street was, if I'll slap my friends around, imagine what I could do to you, China and Europe. And let's not forget Europe. Yeah. He really has the hots for putting tariffs on Europe. And they're coming. They will be coming. So I think he's going to let Canada and Mexico off easy with maybe some minor tariffs, just because of the fentanyl situation until that comes under control and immigration. But I think China and Europe are going to pay the price of this, and the UK eventually as well.
All right. Well, we're going to be on tariff watch, that's for sure. All right, guys, thank you so much. Vince Cignarella here in studio, global macro strategist at Bloomberg News, and of course our Stuart Paul, U.S. economist at Bloomberg Economics.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Let's get to our latest on Elon and his work there at the U.S. government. The Washington Post, we do want to point out, reports that representatives from Elon Musk's DOGE have fed sensitive data from across the education department into AI software to probe the agency's programs and spending. This is according to two people with knowledge of the DOGE team's actions. Again, this is coming from the Washington Post. All of this coming on the back of Elon Musk's efforts into the U.S. Treasury, which came to light this past week. We've been talking about it a lot here at Bloomberg. And it brings us to what is the most read story on the Bloomberg today, about how Elon and his efficiency team, who have gained access to the Treasury Department's computer network, have caused alarm and sparked a standoff between bureaucrats and President Trump's administration. With more, we welcome in Ted Mann. He's Bloomberg News money and influence reporter. He's out there in our D.C. bureau. Ted, a lot of places to go, and we know we heard from the U.S. Treasury Secretary on that. We'll get to that in a moment, but give us an update in terms of the work that Elon Musk and the DOGE team have been doing specifically at the Treasury, the type of back and forth we've been seeing.
Well, thanks for having me. The work that they're doing is primarily focused on the information systems that flow through the Treasury. That's information on all the payments that the U.S. government makes, all the identifications of programs and individuals and all of the stores of information that are contained inside that agency. The fact that this team of relative unknowns were able to so quickly get access to that information alarmed members of both parties in Congress, even Republicans. We reported this morning that 5 or 6 Republican senators have privately lodged objections to the White House when that became clear. Because it's really unprecedented to have relative newcomers crawling through the very most secret forms of information contained within the Treasury Department.
What did the GOP senators take issue with, according to your reporting?
The best that we have been able to understand is that there was a feeling that this was a little bit too Big Brother-ish. That's how one person put it, that this is going deep into personally identifiable information. There was, in some of the early reporting, this sense that the government, that these staffers were really getting a very up close and personal view of what individual information was within the Treasury Department, and they were lodging objection to that, saying that it was, the sort of thing that bothered them as being overly invasive and really uncontrolled. We don't really have any sort of precedent for this kind of behavior.
Who is on the DOGE team? And we're going to hear a little bit later on this hour, in about 20 minutes time or so, the Treasury Secretary addressing some of those officials. But what do we know about who is the DOGE team? And their qualifications.
In terms of the people at Treasury, one thing that we reported this morning, which the Secretary confirmed later on in his Bloomberg interview, is Tom Krause, who's one of those DOGE officials and is now at Treasury, is someone that Scott Bessent interviewed in December when he was putting together his team, and that in that conversation they discussed this very level of perusal of the forms and systems within the Treasury Department that is now underway. And what that shows is that while you have Republicans on the Hill being a little unnerved, not having expected this to happen, Scott Bessent himself is much more on board with this than a lot of people may have previously assumed. I'm
curious we've learned quite a bit from Scott Bessent, thanks to Saleha Mosen's interview with him a little earlier today. He did say that he personally vetted Treasury employees and that they only have read-only access to federal payment data, and there's been no tinkering with the department's payment systems. Does your reporting align with that?
Yeah, that's been the biggest question. And certainly on the Democratic side of the aisle, there was great alarm at this notion that they were getting in there in these systems and potentially altering code, doing things that went beyond simply looking at this information, which is unusual enough, but actually changing what was in there. So this is the first time we've had the Treasury Secretary saying, no, that was not occurring. They had previously sent a letter to the Hill in response to some lawmakers, including Senator Ron Wyden. But even the letter itself seemed to say that they didn't currently have anything that went beyond read-only access. What Bessent said today was that no, they had not changed anything or tinkered with those systems about how money flows.
Hey, Ted, my understanding, too, is a federal judge temporarily limited access to the Treasury payment system. A group of unions accused the agency of illegally sharing members' information with Musk's team. And this is that order that allows read-only access to those two Musk associates, including Krause. What's interesting is it does sound like the legal system is kicking in. So who, in general, are bringing suits and might bring more suits to kind of maybe prevent Elon Musk and his team, the DOGE team, from doing more at Treasury?
Well, in particular, I think you're going to see legal efforts that originate with organized labor, because to the extent that DOGE has sort of signaled its ultimate intentions, one of them clearly is to reduce the number of federal employees. And so the unions who defend those workers' rights are starting to agitate, essentially to slow this effort down until they can understand what's going on. And that is the most likely initial wave, I think, of legal action.
I'm curious. I'm wondering about the potential conflicts of interest here and the concerns about somebody such as Elon Musk with varied business interests competing with companies such as Boeing, companies that are internet service providers, with Starlink, of course, competing against other NASA contractors with SpaceX. What type of data, even if it's read-only, he could have access to that has folks concerned?
Sure. Sources we've talked to, including former members of the Trump administration first time around and other officials, have pointed to exactly that. If you were a businessman with the breadth of interests that Musk has, and you had unfettered access to all of the information in the United States Treasury about your competitors' finances, about payments and payment schedules of the U.S. government to them for the contracts that they hold. We don't know to what extent they have or plan to or will look into tax data. You might want to know a lot more about the taxes of your biggest rivals, the other EV manufacturers. All of that is on the table. And since we've been told that Musk himself will be the one deciding if he has a conflict of interest in what he's up to, the government and the press and the public don't have a lot of assurances that he's not looking at these stores of information as a way to improve his business propositions.
And that's the important distinction, this conflict of interest or potential conflict of interest, right, Ted? I mean, Musk is classified as this special government employee, this temporary designation, limits his term of service 130 days out of the year. He doesn't have to provide those financial disclosures and other ethics requirements. So the classification is there because other administrations have brought in outside help, maybe just for a short-term period. The difference is, many would argue, is that you're bringing in a CEO of a publicly held company, and companies that, in particular SpaceX, have billions of dollars in government contracts with the United States.
That's right. It's the definition of a conflict of interest, to be in the position that he is in right now with continued personal involvement in for-profit companies that do business with the government that he's helping to advise. And advise seems a little like he's going much farther than advising, it seems like to us, from what little they've said. So yeah, this is an unprecedented situation for someone to have the financial interest he has in his companies while simultaneously dictating the operations of the government.
Ted, we should note there are quite a few supporters of Elon Musk and what he's doing. Look no further than the replies to what he posts on his own social media platform, X. What are you hearing publicly from folks inside and outside the government about, the government maybe is spending too much money. Maybe there does need to be some controls. Maybe there needs to be some modernization of these systems. What are we hearing there?
I mean, those are all conventional platitudes of American politics. Everyone always says they're for the government spending less money on things they don't like, and for the government to be more modern and to operate more efficiently and to spend taxpayer dollars wisely. These are not new sentiments. And certainly he's getting, I think, a lot of support from people who feel like maybe this is the way to alter the government in ways that it has not been shaken up so roughly in the past. So there is support for that. And even some of the Republican lawmakers who have privately been a little leery of some of the ways they've been going about their business over the past couple of weeks are still sticking by Musk personally. No one is registering any objections either to Musk or to Trump with some of these early actions, not on the Republican side. So certainly they are acting as if they have a mandate, and on the Republican side there has not been a lot of, nothing really in the way of public resistance to this, only some private concerns.
Ted, after you and the team doing the reporting on this and what's going on at U.S. Treasury, and listening to the Treasury Secretary talk with Saleha of Bloomberg, Saleha Mohsin, in her interview, and what he had to say about the DOGE involvement, do you have more questions that, do you feel like that ultimately if the Treasury Secretary said, nope, you can't do that, that would be it? Or do you feel like it's more of a collaborative question where the president might weigh in, or Elon certainly wields a fair amount of power right now?
Taking the secretary at his word, I don't think we really know the answer to that question, because we don't know what request for access or abilities to change things might come from Musk or DOGE or someone working for him today, tomorrow, or next week. We haven't gotten there yet. We don't know who will have to say no to him. We don't know if they will say no to him. And ultimately, if Musk appeals to President Trump because someone has not given him what he wanted, we don't know what Trump would do. So that is a dynamic that remains unknown, despite what Vincent has said about not allowing them to tinker with the payment system yet. I would also note that in Vincent's interview today with Saleha, what he said was that this DOGE operation is a purely operational review, that it's not ideological. And that's just totally contradicted by the things that Musk is saying publicly. He's referred to USAID as a criminal organization, and he's bragged about feeding it into the wood chipper. So these are two different accounts of what they're up to, and we don't really know what the truth is yet.
All right, Ted Mann, thank you so much. Bloomberg News money and influence reporter joining us from our Bloomberg News Bureau in Washington, D.C.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We are watching shares of Hilton worldwide. The stock rallying to a record intraday. Right now, just under 5%. The hotel company did report fourth quarter earnings. The company's forecast for full year adjusted EPS did miss analyst estimates, but they were encouraged by the outlook for revenue per available room growth. We're talking about RevPAR, as it highlights Hilton's plans to expand into new markets. The news, I should point out, lifting others in the hotel group, including Marriott and Hyatt. Shares of Hilton, by the way, up about 10% year to date. They were up about 35% in 2024.
It's great to have the president and CFO of Hilton joining us. Kevin Jacobs joining us from McLean, Virginia. Kevin, good to have you with us. Talk to us about growth, because you've added 171 properties to your global network. How much more are you planning to do?
Yeah, first of all, Tim and Carol, thanks for having me again. It's great to be on with you. I think how much more is a difficult question to answer. We actually added, almost 100,000 rooms to our system just in 2024, but we signed over 150,000 new rooms into our development pipeline. Our development pipeline is now just about 500,000 rooms, with just about half of those 500,000 rooms under construction. We grew net units 7.3% in 2024, and we gave guidance that we would grow 6 to 7% in 2025, and we think that growth trajectory can continue. So I think there's a great fundamental setup for travel around the world, with a rapidly growing middle class that has shown time and time again that they want to travel, and if people have the ability to travel, they'll travel. So we grow our system in response to travel demand around the world, and in partnership with our owners, our hotel owners and developers, who are allocating their capital to accommodate that growth. And so I don't want to use a lot of hyperbole and say the sky's the limit, but we're very excited about our growth trajectory.
But you want to say the sky's the limit. No.
I do, actually, and I did. So there you go.
Kevin, what I want to ask you, what really Tim and I both perked up when you said middle class, demand, because we constantly talk about there is no middle class, or the middle class feels strained at this point. We talked with the head of Trivago, and talked about, I think, more higher end travel that's going on. Tell us about that sector of your business, what you are seeing, and what do you mean by middle class? What are the rooms that they are looking for, the types of destinations they are looking for?
Well, the second part first, look, we have a growing luxury business, right? Our Waldorf and Conrad brands, continue to do really well. Broadly in luxury lifestyle, half of our signings last year were in that segment. So we serve the upper end really well. But if you think about the addressable market for travel, it's broadly, the middle classes around the world that travel. And we have brands that, starting with Waldorf, but going all the way down to Spark, our premium economy conversion brand. True is our new build mid-scale brand, and everywhere in between. And so our overarching strategy is we want to accommodate, any traveler anywhere they want to be in the world for any travel need they have, and that goes up and down the spectrum of price points. But it's really, if you think about the addressable market for travel, it is broadly speaking the number of middle-class people on the planet.
Geographically, where are you seeing strength and where are you seeing weakness?
I mean, in terms of growth or fundamentals or both?
I want to know fundamentals.
I mean, we're not really seeing weakness. Our fourth quarter exceeded our expectations. We grew RevPAR, which is our metric for same-store sales, 3.5%. We 2.7% growth for the year. We're in a situation where capacity additions are relatively constrained. As measured in the U.S., it's about 1%, a little bit harder to track globally. But broadly speaking, call it 1% growth around the world. Demand is probably growing a little bit better than that, 2 or better. So that gives you a little bit of pricing power. And then with inflation, you're able to take some price. And so our guidance for system-wide for the year is 2 to 3%. The U.S. probably at the lower end of that range. China probably at the lower end of that range. And then other parts of the world like Europe, the Middle East, and Asia Pacific ex-China, sort of growing at the higher end of that range, if not higher, mid-single digit growth.
Hey, Kevin,
so we're really not seeing weakness in fundamentals anywhere in the world.
Interesting. In the U.S., though, specifically, any difference between business versus leisure travel demand and how that's trending and what that might mean for profitability?
Yeah, I mean, quarter over quarter, coming out of COVID, obviously you saw a lot, a little bit of a mix shift, or actually in COVID, like a big mix shift, but then coming out of COVID, a little bit of a mix shift, call it 4 or 5 points of mix of our business to levels of leisure travel that were historically higher than they had been. That's sort of normalizing. It varies quarter over quarter, but all of our segments were strong in the fourth quarter. So leisure transient grew 4% in the fourth quarter, business transient grew 3%, and group business grew 3%. We think that business transient, as it continues to recover, and particularly group, which is on a lag, because the bigger the group and bigger the meeting, the longer it takes to plan. And so group business tends to be on a lag. And so we think group and business transient will lead the way, with leisure being a little bit softer. But that's not because it's really softening per se, but it's more just kind of tougher comps.
Hey, listen, you also, when you were kind of going through geographies, you mentioned China in particular. We've been wondering, any indication that the domestic hotel bookings, that the weakness that you guys have seen in China last year has ameliorated with some sign of improvement. Any more color you can give us around the business there?
Yeah, I mean, our expectation is that it will grow this year. You mentioned, you're right, the comps are easier, right? We were down about 5% last year. We do think we'll be up a little bit this year. The other thing you're seeing in China that you have to think about in those numbers is, their consumer is a little bit weaker than it's been in the past, but they've now opened up cross-border travel, right? So some of the reason that domestic China is a little bit softer is because you have a portion of Chinese travelers who are going outside of China, which is benefiting our business broadly in Japan and the rest of APAC outside of China.
Everybody's going to Japan. That's the one thing we keep hearing.
Hey, Kevin, we're asking everybody we talk to about how Washington is affecting their business and the transition there. In your view, how has U.S. business sentiment changed since the presidential election? How does that make you think about Hilton's 2025 room price and occupancy outlook in the wake of tariffs, a potential trade war, and just overall sentiment?
Yeah, look, I think start with overall sentiment is generally more positive, right? I mean, I think about for whatever your views are on all these various issues, I think, broadly the expectations for the environment around regulatory issues, taxation, fiscal policy, et cetera, are that it's going to be supportive of economic growth. There are some other things, trade wars and tariffs, tend to be, can be tricky, but I think it's early days to know what's going to happen for all that stuff. And, baked into our guidance that I won't repeat because I said it earlier, is our best thinking on that, which is just, look, we think generally speaking, if you look at survey data, if you talk to customers, if you talk to people that run businesses around the country, I think people are generally more optimistic since the election, and we suspect in the near term that that's going to continue to support fundamentals. What happens, specifically around certain policy decisions, I think, some of them could be headwinds, some of them could be tailwinds, but again, broadly, the fundamental setup in our business with capacity additions in check, demand growth, the picture for demand growth and the prospects for a recession seem pretty low. A little bit of inflation around the world, and then us, continuing to take share, both in terms of accommodating customers and then in terms of our share of the development pipeline. We're nearly 20% of the rooms under construction around the world, and we're only 5% of the in-place supply, so we fight above our weight.
We got to run. So glad we got some time with you. Kevin Jacobs, President and CFO, I should say, of Hilton, joining us on Business Week.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
We got a snapshot of what's going on in Big Pharma thanks to results from two big players. Pfizer reported on Tuesday, Eli Lilly reporting results this morning. You've got that going on, and then you've also got Robert F. Kennedy Jr. clearing a Senate panel, making his way toward confirmation next week. It's something certainly Big Pharma has been watching, Tim. For more, we're joined by Geoff Meacham, Managing Director and Global Head of Healthcare over at Citibank. Shares of Lilly higher right now by just about 3%. The earnings forecast came in line with analyst estimates. Geoff, there was some discussion on the call about whether Lilly is at all concerned about demand, given the weird supply chain dynamics that have led to 2 consecutive sales misses. Lilly brushed off those concerns. Are investors right to be concerned?
Yeah, it's a great question, Tim. And by the way, thanks for having me. Demand is by far, I think, one of the bigger picture concerns for Lilly. If you don't have demand, the stock really is not going to work. But I'd say 3Q and 4Q, the disappointments that we saw, I think were mostly related to inventories. And we've done physician checks. You're looking at all the competitors, including Novo. Demand is unequivocally strong for obesity, and it's still very, very strong for diabetes as well. So I feel very good about the picture. I'd say today's move in the stock is really a bit of a relief that there's now a beatable bar on top and bottom line, and that there's less, I think, anxiety right over trying to beat bigger, numbers that are really kind of outsized.
I mean, and going, just staying with the obesity market, Geoff, I mean, what are the latest numbers in terms of the potential for this market, and are these numbers, do they continue to go up?
Yeah, good question, Carl. Yeah, I mean, I think if you look at the end of the decade, clearly, we're talking about this being well more than $100 billion market. Diabetes should be a very big component of that, but obesity, I think, is obviously in its hyper growth phase. No one's talking about obesity being at a 25-30% penetration kind of market. Even being $100 billion potential for GLP-1s or more. We're talking about still a 10-15% penetration in obesity. So there's a lot of room to go. Even if pricing collapses, you still have, I think, much stronger likelihood that people will want to go on the drugs. But the other thing that's not really talked about is that you have a bunch of other indications: sleep apnea, heart failure, chronic kidney disease. Lilly just announced hypertension with their new oral orforglipron. So the totality of indications that could address it probably could be multiples, right, of the current, diabetes market. There's a lot of these indications are obviously related.
Is this likely to be, this class of drugs, the largest, kind of drug group ever in the pharmaceutical industry?
I think so. And it's not that, we're just talking about a simple weight loss drug in obesity or HbA1c kind of management and diabetes. I mean, these drugs reduce, risk of death, of cardiovascular disease. They lower lipids, they lower blood pressure. So the totality of the benefit is very dramatic. And I think if you look at the Venn diagram of overlapping indications, certainly diabetes and obesity are at the core, but there's a ton of other indications that Lilly and Novo haven't even talked about, but
Right.
still could easily be addressed.
But it's all basically, right, lose weight. I'm not trying to be silly about it or stupid about it, but it's the concept of, obesity and the problems that creates on an individual, but that you courtesy of a drug, lose weight, and then so many other health ailments go away.
You are right that losing weight is by far the biggest component of it. But we also see in a lot of these trial readouts, things like changes in behavior, like reduction in compulsive behaviors. So it's more than just the weight. There is sort of the gut-brain axis, piece of it, which is still have yet to be fully, vetted out. But certainly, there are other mechanisms in place besides just sort of reducing, for example, the time that food goes through the gut, and that is a direct result of losing weight. There's probably half a dozen sort of mechanisms that are in play kind of in the background that I think we haven't real fully vetted yet.
We've got to talk about RFK Jr. and what he could mean for drug makers or vaccine makers. Do you think he'll be more focused on food? Do you think he'll be more focused on pharmaceutical companies? During the early parts of his hearing, there was a lot of focus on pharmaceutical companies and funding. How are you viewing his likely confirmation?
Yep. Yeah, I'd say overall, I think there's a very high probability that he is ultimately confirmed. I think food is less controversial, for sure. I think the only thing really here is, how strong is the food lobbying group as sort of pushing back on some of the changes. But in the pharma world, though, no one's talking about, and he's not talking about pulling vaccines from the market. All it really is maybe recommendations coming down from, for example, CDC or FDA. I think it's just transparency is the main objective there. The other debates really are IRA discounting. Is it going to be still a direct negotiation between CMS and drug companies? Or is it going to be another mechanism like, lowest price in the G20, most favored nation discounting? We'll see. But there's only a couple of hot button issues really that we have. But I would say his hearing, though, I think really validated the fact that, he's not going to govern with the same kind of, off the cuff kind of commentary than he had on podcasts, for example, prior to the election.
Interesting.
Well, and it's interesting, and just, got about a minute left here. Pfizer also came out with their earnings. That was on February 4th, so a couple of days ago. Stock was traded lower. The CEO, Albert Bourla, talking about having, I believe, dinner with Robert F. Kennedy Jr. I think the president, he said, had introduced him, and also saying, I feel cautiously optimistic that they will be very, very prudent with everything that they do, referring to Kennedy and the Trump administration. Good that they're having a conversation, expectations too in terms of policy, and just got about 30, 40 seconds here.
Yeah, for sure. I would say the main thing coming from Trump and the public commentary is really that no matter what, the biotech and pharma industries are one of the more innovative sectors that we have in the U.S. And I think if you have aggressive discounting mechanisms, if you reduce access to the drugs, I think you're going to mute the impact of that. And so I think there has to be a bit of a balance. And Bobby Kennedy and Trump and a lot of the other folks working with RFKJ across healthcare, I think are going to help with that. But it's good to recognize, though, that the sort of the innovation and the access to novel drugs is really kind of at the forefront of a lot of the policies.
Great stuff, Geoff. Already looking forward to next time. Geoff Meacham, Managing Director, Global Head of Healthcare at Citibank. Shares of Eli Lilly up about 13% this year. Pfizer down about 3% year to date. This is Bloomberg.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. Just about 18, 19 minutes left in today's trading session before we get to the close on this Thursday and then some big earnings. We keep talking about Amazon, but that's not the only one reporting. Take-Two, Expedia, Microchip Technology, e.l.f. Beauty, Pinterest, Affirm. So just a few companies that are coming out after the close. We're going to be busy.
Which one are you most excited
Well,
about?
come on. Amazon.
No, I thought you were going to say you have no favorite children.
You mean when it comes to earnings?
Yeah.
I don't know. Amazon will be an interesting one just because of the size of it, the might, the cloud, the AI, all of it.
Hey,
AWS.
I'm curious what Jim Smigiel is focused on. He's Chief Investment Officer over at SEI. SEI's got about $476 billion in assets under management. Back with us from Oaks, Pennsylvania. Jim, how are you?
I'm doing well. Suburban Philadelphia. I'm focused on Go Birds this weekend.
Okay.
I bet you are.
You're busy. Hey, are you going to have a chance to actually watch the game, or are you going to be focused on what we hear from the White House when it comes to tariffs or any other breaking news?
I will cut out Sunday evening and block everything out and be solely focused on the Big Easy for sure.
Okay. The reason I ask is because that's certainly what I think a lot of folks did last Sunday when they were hearing from the White House about reports of tariffs and the news that we did get. How are you looking at...
They were watching the Grammys? Is that what you were saying?
No. I was, were you watching the Grammys?
I was.
Oh, okay. I was trying to read up on tariffs and,
There was stuff that...
the U.S. Trade Representative website, USTR,
stuff.
those sorts of things. How are you looking at the uncertainty there?
We are, like most, I think, trying to take a little bit of a longer term view. I mean, these initial kind of forays, particularly when it relates to Mexico and Canada, I think President Trump did kind of attach enough of a border and fentanyl issue to those tariffs that we weren't overly surprised that they kind of came off, or at least that can was kicked down the road for 30 days.
I think just to jump in, I think that for a lot of people that may make sense for Mexico, but there's been concern about, well, what's the actual measuring stick if only, sub 50 pounds of fentanyl came into the U.S. from Canada last year?
Yeah, if you dig into that a little bit more, there was a huge British Columbia bust of a fentanyl lab. When you hear the 50-pound numbers, that's what gets caught. I think the reality is it's a very long, porous border to the north. And I would imagine that those in the Justice Department are aware that is a bit more that is a bit more than what maybe the headlines of 50 pounds would suggest.
That's a good point.
All right. So a lot coming at us. Earnings. You've got whatever comes out of Washington in terms of policy or changes. It was interesting. We've been kicking around a story that has come out on the Bloomberg. I just want to pull it up here. This has to do with what President Trump might do in terms of, as he moves on to one of his next priorities, tax priorities, and outlining some of them in a meeting with Republican lawmakers, including ending perhaps the carried interest tax break, expanding the state and local tax deduction.
Excuse me?
Yeah.
The salt?
I live in a high salt. Yeah. That'll make me happy. But having said that, tax policy is going to play into certainly the amount of money that potentially is out there in the economy, also could play into the inflationary pressures. So how do you roll into how that might mean investors might want to think about their portfolio at this point? Or maybe it's too soon.
Yeah, I think there's a little bit of that, right? We're seeing that with the tariffs, because that's what 2025 is, particularly this first 6 months, is going to be this big balancing act. What are the positives that we're going to see from deregulation, from lower taxes, from a fiscal stimulus perspective? How are we going to balance that out from potential inflationary pressures coming from tariffs? This is really what we're all faced with. And as this administration is prone to, there's going to be a lot of headlines before there's actually action. So the only really way for the investor to kind of handle this is take a slightly longer term view. We think that balancing act does leave us positive risk assets here in the short term, but we're keeping our eye on rates. We're keeping our eye on that magical 5% level. That's kind of our guide for 25 to see when we start getting a bit nervous, and perhaps investors should get a bit nervous as well. Tomorrow, the employment report, very, very important. Chair Powell kind of really blew off that part of the Fed's mandate at the last press conference, saying, "Look, we think the employment situation is perfect right now." there's a chance the whisper number being 170. We also get revisions tomorrow, which is very, very important. That's something that could actually be a market-moving event if that tilts this kind of Goldilocks scenario with the employment situation one way or the other.
We talked about that earlier with Stuart Paul. Yeah.
Hey, Jim, in your view, was the Fed chair, was he right to sort of shrug off the concerns about labor? I mean, it was just a few months ago that labor it seemed to be more of a priority when it came to that dual mandate. Do you think he's right here?
I think he's a little too confident because, when back to my notion of this balancing act with regulation and tax cuts on one side, tariffs and immigration reform on the other, it kind of comes down to this wage pressure issue. Is there a chance that as we get through the first quarter and into the second quarter, we see some wage pressures building? That could make things a bit more difficult for the Fed and the story that they can look past employment and focus on inflation as kind of their real problem child.
Hey, one thing I wanted to ask you, there was a story out there, this coming from JP Morgan's Global Quantitative and Derivative Strategist, that investor sentiment across the so-called mom and pop traders reaching the highest level on record. So we're talking about retail traders. Is that a positive sign in your view?
It's a positive sign in one way, in that what's really been working in the market for the last 12 months is momentum. And that's kind of a bit of a sign that momentum is probably going to continue in the near term. From a timing perspective, when you get that massive amount of optimism, you're always asking yourself in the back of your mind, are we getting close or calling a top? We have all these earnings coming out. That's really what 2025 is going to be. Can earnings deliver? We don't see a lot of multiple expansion from here, not surprisingly. We do see, and I think this was mentioned a bit earlier, financials actually are having a great year. That broadening out of equity performance is something that we do expect to continue. And that could actually make the mom and pop trade one that is correct. It's just not going to be driven from the same concentrated players as we've been seeing.
All right, we're going to leave it on that note. Really appreciate the overview. Jim, take care. Have a great weekend. Good luck on the big game, although I am kind of rooting
Carol,
for Kansas City.
Chiefs fan, so...
I'm a Giants fan, so I can't.
Is that what it is? Is that all it is?
Yeah, kind of.
It does nothing to do with...
Yeah. You don't want to wear a Giants
jersey
at
It has nothing to do with like anything else?
Philadelphia. What?
Nothing to do with anything else? Like...
No, it's not the Taylor thing.
Okay.
Yeah.
I'm just making sure.
That's kind of interesting. I don't know. And it was
really
cool to see them win again.
It was a lot more interesting in last year.
Why?
Yeah, everyone was talking about it last year. Now nobody really cares.
It was newer, right?
Yeah, nobody really cares.
Can't keep track. Okay.
I don't know.
Welcome to Bloomberg Businessweek, the People magazine version.
Elizabeth says, fly, Eagles, fly.
Yeah, boo on you.
This is the Bloomberg Businessweek podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.